Arthur Goldstuck, who's an author and information and technology commentator in Johannesburg. Good to speak to you, Arthur. Now, with hyperscalers securing supplies of high bandwidth memory years in advance, are we entering a new phase where everyday consumer electronics become permanently more expensive?
We're definitely entering a new phase on different levels. But what's fascinating is that Micron's earnings are the mirror image of Apple's price increases, because as AI infrastructure build-out accelerates and AI models need more memory, there's a shortage of memory, prices go up. Therefore, a company like Microsoft finds itself in a boom phase, whereas Apple, in turn, has to charge more for memory because of it becoming scarce and valuable. So Apple is paying more for the components that Micron is benefiting from. So you're really seeing a market that is shifting on several axes.
And with the likes of Micron reporting such extraordinary growth driven by AI demand, how sustainable is this pace of expansion, and when could demand from AI data centers begin to level off?
Well, what we're really seeing is acceleration. And Micron's earnings are showing that the infrastructure behind AI is still experiencing massive demand. Every AI model depends on those vast amounts of high performance memory and storage and networking. So the companies supplying the building blocks will continue to benefit from this investment cycle. And you're seeing it in Asian markets where it matters even more because most of the world's semiconductor supply chain is concentrated in that area. So as demand for AI infrastructure strengthens, investors are looking to memory manufacturers and chip equipment suppliers and electronics companies. So we're seeing that as a broader shift that's taking place. In the past, investors were captivated by the AI models themselves. Now they're looking at the industrial backbone of AI. And that's not going to slow down because the market is becoming more disciplined. Investors are looking to reward companies that can demonstrate real demand and revenue growth. And they're not attaching themselves to an AI narrative, but rather a growth narrative. And we can't expect that growth to slow down anytime soon.
Now, what happens to smaller tech companies if they're completely priced out of the essentials needed to train their own AI models?
They need to look at the old story of when there's a gold rush, you should be selling shovels. So smaller tech companies should be looking to see how they can supply the components that are needed to keep the AI boom going. So if they can't manufacture chips, they should be looking at how they can support the chip manufacturers and also support the AI model makers. But there's multiple levels on which small businesses that are agile and innovative can feed into this, I won't call it frenzy, but into this acceleration.
Arthur Goldstuck, great to speak to you as always. Thank you.